Three symbols define modern wealth. One built empires, one preserved them, and one threatens to replace them all. The US dollar, gold, and Bitcoin. Each one represents more than just money. They represent trust, control, and survival in a world where power shifts faster than ever before. But here's the real question. Which one truly holds value? Which one is gaining dominance, and which is slowly losing power? Because while the headlines scream Bitcoin is the future, gold never dies, and the dollar is doomed. The truth is far more complex and far more important for your financial future. In this video, we're not just comparing prices or charts. We're uncovering how each form of money has shaped history, and how one of them might quietly control the entire global economy for decades to come. Stick with me until the very end, because the final comparison will change the way you think about money, investing, and power forever. And before we begin, we're building the biggest finance and trading channel on YouTube. If you want to understand how markets, wealth, and economic systems really work, make sure to subscribe, because everything you need to know happens right here. To understand which of these assets truly matters, we need to understand how each was born and why they exist at all. Let's start with the US dollar. The dollar wasn't just another currency, it was engineered through war, global trade, and strategy to become the most powerful financial weapon on earth. In 1944, after World War II, the world met in Bretton Woods. Nations were rebuilding from ashes, and the US, which held 2/3 of the world's gold reserves, offered a deal. Peg your currencies to the dollar, and we'll peg the dollar to gold. It sounded fair. It wasn't. It was brilliant. The dollar became the center of global finance. It was backed by gold, but controlled by America. Then in 1971, Nixon cut the link to gold. Overnight, the dollar became a fiat currency, backed not by metal, but by trust. And yet the world still used it. Why? Because every nation traded oil, food, and goods in dollars. The US had turned money into influence. Now let's talk about gold. Gold predates nations, systems, and even recorded history. From ancient Egypt to modern central banks, gold has been the universal store of value. It doesn't rust, it doesn't default, it doesn't depend on governments. But gold's biggest weakness? It doesn't grow. It just sits, preserving value, not multiplying it. Then came Bitcoin. Born in 2009 during the collapse of the global financial system, Bitcoin was designed as digital gold, a form of money that no central bank could control. Limited to 21 million coins, Bitcoin became the first asset built entirely on mathematics and code, not politics. So now we have three systems: gold, ancient and scarce; the dollar, powerful and trusted; Bitcoin, new and decentralized. Each one competing for the same title, the world's ultimate store of value. Money is only as valuable as the trust people place in it. Gold's trust comes from scarcity. The dollar's trust comes from military and economic dominance. Bitcoin's trust comes from mathematics and decentralization. But when we talk about value, we have to measure it. Let's use performance. Over the last 50 years, gold has appreciated roughly 5,000%, from about $35 per ounce in 1971 to over $2,000 today. The dollar in that same period lost 85% of its purchasing power due to inflation. Bitcoin, from less than 1 cent in 2009 to over $60,000 at its peak. That's a gain of more than 600 million%. But numbers alone don't tell the full story. Gold is stable. Bitcoin is volatile. The dollar is essential. They play different roles in the global economy, and understanding those roles is key to predicting who will win in the long run. Today, over 80% of global trade still happens in US dollars. Nearly 60% of global reserves are held in dollars. The reason? Infrastructure. Every global payment system, SWIFT, CHIPS, FedWire, runs on the dollar. Every commodity, oil, wheat, gas, is priced in the dollar. This network effect gives the dollar power that no other asset can match, but it's also built on debt. The US owes more than $35 trillion, And the only way to sustain that is for the world to keep using and trusting the dollar. That's why the U.S. military trade policy and sanctions are all tied to dollar dominance. It's not just a currency, it's a system of control. When markets panic, people run to gold. When inflation spikes, central banks buy gold. Why? Because gold has no counterparty risk. You don't need a signature or a promise. You just need the metal itself. In 2023, central banks bought more gold than any year in modern history. Nations like China, Russia, and Turkey are quietly accumulating tons of it. They're not doing it for profit. They're doing it for independence. Gold is the anti-dollar, the escape hatch from the Western financial system. But here's the problem. Gold is slow, hard to transfer, and difficult to store. In a world where transactions happen in milliseconds, gold is the old guard. Bitcoin was built for exactly this era: distrust in banks, government money printing, and global debt. It's scarce, transparent, global. And unlike the dollar, no one can print more of it. But it's also unpredictable. Bitcoin crashes 80% and then rises 1,000%. It behaves less like currency and more like digital speculation on the future of money. Yet despite volatility, Bitcoin adoption is spreading. Over 300 million users globally. Countries like El Salvador adopting it as legal tender. And Wall Street giants, BlackRock, Fidelity, JP Morgan, now offering Bitcoin ETFs. Bitcoin has crossed the line from rebellion to recognition. Let's compare the three. Bitcoin is the most profitable, but least stable. Gold is the most trusted, but least productive. The dollar is the most used, but most inflated. During the 2008 crash, the dollar surged. During 2020's pandemic, Bitcoin crashed first, then tripled. During inflation in 2022, gold rose slightly, but not enough to offset currency loss. The data shows one truth: no single asset wins every time. Each dominates under different conditions. Crisis equals dollar inflation, equals gold innovation, equals Bitcoin. That's the triangle of modern finance. The dollar is still dominant, but weakening slowly. Gold is steady, regaining interest from central banks. Bitcoin is volatile, but gaining legitimacy. Power is shifting, not collapsing. The next decade will decide everything. If inflation continues and digital adoption grows, Bitcoin becomes the strongest store of value. If trust breaks and nations seek stability, gold regains power. If the U.S. maintains control of global trade, the dollar remains king. But there's also a fourth possibility: a hybrid system where all three coexist. Gold for trust, Bitcoin for technology, dollar for transactions. In the end, money isn't just about price, it's about power. Gold represents history, the dollar represents control, Bitcoin represents freedom, and the world is now caught between them. The question isn't which one survives, it's which one you'll trust when the next financial reset begins. If you find this video interesting, make sure to subscribe, where we will be decoding money, markets, and power. The future of wealth starts here.